We now move to Unit 5 under Wealth Management, and we're going to talk broadly about what kind of taxation rules apply on individual salary, on investments, and on any other kind of incomes that people have. We need to have an understanding on this because at the end of the day, it is a post-tax return that we are concerned about. Remember, taxes are expenses, they are real expenses that come in real life. And when someone is trying to meet a goal through a particular investment, it is important that we take into consideration what kind of taxation requirements come up. It is also important to understand what ways the tax incidence, which is basically how much tax someone has to pay, can be minimized, right? By taking some simple steps, is it possible to avail of all the offers that the government gives? In fact, in a way, the government is giving discounts or offers while someone is making a payment on tax. Is it possible to avail of all those by a plain simple knowledge of those? And can a salaried person or an investor reduce the tax incidence by using some of these features in real life, right? So we're going to look at these portions on taxation. It's a fairly practical set of understanding. We're going to look at a few cases and understand how do we go about implementing the features of taxation. The second part of this particular unit is going to discuss about exercises in financial planning. We're going to take a case and we'll try and build an entire case around what kind of financial planning exercise needs to happen for any individual and family when we are looking at meeting of overall goals using wealth management or wealth advisory, right? That'll come later. Let's first stick to the taxation bit. Let's understand what kind of tax incidence comes up on any individual. Usually, under heads of income, there are 5 broad heads of income that come up for any individual. People could have income via salary. People could have income via house property if they own a home. They could have income via business or profession. Unlike salary, someone could be a doctor or a lawyer or a chartered accountant, and they could be getting income directly from their profession rather than being a salaried employee somewhere. They could have some capital gains, which is via some sort of investments, and they could have any other income. Other income could be interest income, it could be some sort of gains that come up, or that suddenly happen that are in a way incomes that cannot be projected. So we'll look at examples of those when we look at other income in more detail. Now, broadly, these 5 headers are what are the most important concepts. And when you deal with wealth advisory, a lot of the people who avail wealth advisory services are people who are salaried professionals or people with income from business and profession. So this advisory is useful because this is not told to anyone. In fact, if we work tomorrow somewhere, then we will probably use the same advisory for our taxation purposes as well, right? The moment someone buys a home, income tax on house property and what kind of income you generate out of house property starts coming into the picture. And obviously, over a period of time, as people build a corpus, capital gains become important. So what really happens is that over a period of time, people start building onto almost all of these headers as they kind of build their investment portfolio. So all of them will keep becoming important. We'll take them one by one as we go along. When we look at calculation of overall tax incidence for someone, for a person, tax could come from any of these headers. If income is available from any of these headers, there will be a tax on those, right? So let's look at the simple tax calculation. One of the 5 headers of income, right? Any of these 5 headers, then you have some deductions which are allowed. We will look at examples of this. So you get the net total income. On this, there is a tax rate. You will apply the tax rate. And then there are some levies that the government charges from everyone. So if the government wants to kind of develop education, they will have an education cess. If they want to develop agriculture, they will have an agriculture cess, and so on and so forth. Any relief that is available for people may not be available for all the people. And then finally, you get an income tax after cess and relief. We will look at cases of calculating the entire income tax for people. Right? There are calculators which are available off the web. We are probably going to use one of these calculators to understand how broadly simple tax calculation can be done for someone who's a salaried individual, has some sort of house and property income that comes in, and has some sort of capital gains that comes up, right? Most of the times you will see a combination of these three, which become the most important parts of income taxation. Sometimes you have a combination of these three, which become important. Over a period of time, house and property and capital gains both become important ingredients of taxation, right? So that's important for us to look at. Let's focus our energies on the first header in this case, which is nothing but the salary income at this point of time. Now, salary is an income earned in employment by an individual. Income from salary is documented in something called as Form 16. So every time an individual basically does service for some firm, they are given an income, and this salary is basically shown in a form that is declared by the employer. That's called a Form 16. Eventually a Form 16 is given. Every company where a person has worked, they will get a Form 16 for one financial year. So if someone has worked in multiple companies, has changed jobs, there could be more than one Form 16s that are available, right? Form 16 is nothing but a form that is going to tell you what has been the income that has been paid to you. Usually employers are supposed to do what is called as tax deduction at source, right? So it is called as TDS, tax deduction at source. So if the income of someone is 10 lakhs, whatever the tax incidence is, the employer is supposed to cut it and then pay whatever is left. So it's kind of tax getting deducted at the source itself where it is getting generated, right? Income is getting generated by the employer. At the same point, you're putting a tax on that as well. So that's what happens. And all this is documented in the Form 16, right? Now in India, income tax is slabbed progressively. What do we mean by a progressive tax slab? That low income has less tax, high income has more tax. So that's what we're going to look at. What are the slabs that are defined? So as of now, the salary income taxation slabs are defined in this form. So income up to rupees 2.5 lakhs for individuals, both men and women. It used to be different for a while in between, but now it's the same. So individuals up to 2.5 lakhs of income per annum. This is per annum income. There is no tax. Then income between 2.5 to 5 lakhs, there's a 10% tax. Income between 5 lakhs and 10 lakhs, there's a 20% tax. Income more than 10 lakhs, there's a 30% tax. So you will see that the tax incidence increases as the income increases. So that's the first understanding we have. Second, remember that it is always incremental. Tax is incremental. What do we mean by incremental? If the income of someone is 4 lakhs, that doesn't mean that 10% is on the entire 4 lakhs. The 10% is only above 2.5 lakhs till 4 lakhs. So up to 2.5 lakhs, there is no income tax. 4 minus 2.5, whatever is left, that's 1.5 lakh into 10%. So 15,000 is the tax incidence that comes out. So tax incidence is incremental. As income increases beyond a particular slab, whatever is the income, on that the new rate applies. The new rate does not apply on the entire amount, remember, right? If we are looking at a senior citizen, that's someone who's 60 years old or more, but less than 80 years old, both men and women, then there is an extra rebate, which means there is no tax up to 3 lakhs. So extra advantage of a total income of 50,000. And when you compare it here, if someone has an income of 3 lakhs here, If someone has an income of 3 lakhs a year, how much would be the tax incidence? That will be 3 lakh minus 2.5 lakh into 10%. So that's going to be 5,000. Here, there is no tax up to 3 lakhs. So effectively, the benefit for a senior citizen is to the tune of 5,000 rupees, right? If you are a super senior citizen, anyone above 80 years old, there is no tax up to 5 lakhs of income. There's no tax up to 5 lakhs of income. Above 5 lakhs, the income tax moves in a slab that is around the same rates, 20% and 30%, right? But up to 5 lakhs, there is no tax. We'll look at a few examples and understand this in more detail. In addition, there is a cess of 3% on total income tax, which is put up. Whatever is the income tax. So if the income tax is 15,000 plus 3% of 15,000 will get added. That's a cess that is applied, right? This is education cess and all the other things that the government does out of those, right? So that's something that is very, very important when we look at that. Plus, if anyone has an income of more than rupees 1 crore, right? Total income greater than 1 crore, then you put up another 12% of income tax as a surcharge. So people beyond a certain income level will have to pay more taxes when we look at the salary income tax slabs at this point of time. If your income is beyond 1 crore, you end up paying another 12% on the overall income tax that you are paying, right? In addition to the cess that is there. So that becomes the surcharge that comes up. Let's look at a few examples, right? Rajesh is 35 years old. His income is rupees 8 lakhs per annum. What is the income tax he will have to pay, right? Go back, 35 years old is going to be in the first slab. Total is 8 lakhs. Note that up to 2.5 lakhs, there is no taxation. So let's understand this. Total of 8 lakhs, up to 2.5, zero tax. What is left is 8 minus 2.5. So 2.5 to 5 lakhs is 10%. So that's going to be, for this 2.5 lakhs, 5 minus 2.5, there is a 25,000 tax that comes up. And from 5 lakhs to 8 lakhs, from 5 lakhs to 8 lakhs, that's a total slab of 8 minus 5, that's 3 lakhs. For this, there is a taxation of 20%. So here there is 60,000. Overall tax being 85,000 in the first case that we are looking at. If the income had been 11 lakhs, then we are talking 25,000 here. We're talking 20% of this 5 lakhs, so that's 1 lakh here. And we're talking 30% of the last 1 lakh, that's 30,000 here. So that's 155,000. Remember to add this 3% on it. So this into 1.03 and this into 1.03. 1.03 is because we are adding the 3% on the income tax. That's going to be the overall tax incidence, right? Ali is 64 years old. His income is 75 lakhs per annum. What is the income tax that needs to be paid, right? 75 lakhs per annum. So up to 3 is 0. 3 to 5 is 10%. So that's 20,000 that comes up here. 5 to 10 is 20%. That's the straight 1 lakh. You could use some of these as shortcuts. Above 10 lakhs, 75 minus 10 is 65 lakhs. So on that 65, there is a 30% incidence. 65 lakhs, 30% incidence is going to be approximately 19.5 lakhs, right? 19 lakh 50,000 is going to be the tax amount. So overall tax that you're looking at is 20 lakh 70,000 is the overall tax that this person will pay into 1 plus 3% surcharge, the cess that is going to get paid, right? And if the same person was 80 years old, then in that case, this 20,000 is saved. Everything else remains the same. This 20,000 will get saved. You have 1 lakh here and you have 19 lakh 50,000 here. That 20,000 gets saved for a super senior citizen, right? Seema is 50 years old. Her income is 1 crore 20 lakhs per annum. What is the income tax that is going to get paid? Right? Income is 1 crore 20 lakhs per annum. So now the surcharge will come into the picture. We know that till 2.5 lakhs there is 0. 2.5 to 5 lakhs we have 25,000. Then 5 to 10 lakhs we have 1 lakh. And then we have 1.2. So 120 minus 10 effectively. That's what we're looking at. So on 1 crore 10 lakh rupees, there's a 30% tax on 1 crore 10 lakhs. So that's 33 lakhs of taxes, right? Add up all these. So 33, 34, 34 lakhs, 25,000 is the overall tax. This into 1 plus 12% into 1 plus 3% is going to get added as surcharge and cess over and above that, right? That's the overall tax incidence. So 15% is getting added on this amount itself. Ajit has just started earning. Income tax is 3 lakh. What is income is 3 lakhs? What is the income tax he has to pay? 3 lakhs up to 2,500, nothing. If you have a 3 lakh income, for the remaining 50,000, you have a 10% tax. So that's 5,000 that you're supposed to pay. That's the income tax on salary. That's how we basically calculate the salary income taxes. A couple of questions as we come to the end of this particular video. Name the various headers of income for any individual. And if the salary of an individual is 32 lakhs per annum, what is the income tax assuming that the age of this individual is 45 years? Thank you.